Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Matt Stranz on the pod. He is the managing director of business development for a private equity firm called Great Range Capital based in Kansas City. We talk a lot about the values that Great Range Capital kind of targets both in their kind of portfolio companies that they go after. And also we talk about their very unique business development strategy using market ambassadors in these very niche kind of Midwestern markets to source deal flow because maybe they are a local person that grew up there. And it's a very just kind of interesting model. So we dig into that quite a bit. So if you're a private equity firm and you are thinking about unique strategies to generate more leads into kind of these generational founder family businesses, definitely a good podcast to listen to. So let's get Matt on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Matt, thank you for being on the podcast. Thanks for being here.
Hey, thanks for having me on, Justin.
Cool. So let's kind of jump right in, give the audience a little bit of an overview of kind of who you are, where you are, and what you're up to.
Sure. Well, my name is Matt Stranz. I'm the managing director of business development here at Great Range Capital based in Kansas City. I am a native Midwesterner. I was born and raised in St. Louis. I spent the majority of my childhood in the region. Ended up going to the Northeast for my education. I went to Boston College and decided to get into the exciting world of accounting and finance post-graduation. I spent the first 7 years of my career at Price Waterhouse in the Boston office. I focused on the assurance practice, was a manager in that group, focused on industrial tech and technology-based businesses. Ultimately decided that I wanted to continue my education and move back to St. Louis with my wife at that time. We focused wanting to come back for a couple of years and then probably move back east. And we ended up still being here in the region now today. Went back to do my MBA at WashU in St. Louis, studied entrepreneurship of all things there, wanted to have the broad skill set across all business disciplines, looking to either buy my own company, be on the investment team for a bit for a firm, or spend some time being an operator at an early stage startup in the region as well.
So how did you kind of like make the jump from kind of like, hey, I want to be potentially in, a big four accounting firm, and then being like, hey, I may want to go buy a business. Like, sometimes that, people that get into the big four, they just ride that train forever.
Yeah.
So it's kind of curious, kind of how, was that always a thought that you wanted to kind of be either an entrepreneur or get into kind of the investing side?
No, it actually came about to me more with the experience of doing the Big Four work. So I had the opportunity to work with early stage startups, from Cambridge all the way to the multinational businesses in the Boston region, and ultimately determined that, seeing everything from early stage to middle market to global multinational type businesses had really the lay of the land as to where I felt I could be most influential in my career going forward and where ultimately my interests lied. And, a lot of my time was spent in that middle market, private equity backed businesses, doing roll up strategies, found that really intriguing and exciting, but also really liked working with the startups and the entrepreneurs. I loved the way they thought. They thought outside the box. Everything was experiential learning, always working with a ton of white space and willing to craft their business and their plan going forward and as best they saw fit.
Got it. And then how did you kind of make that pivot into the private equity world? It's not an easy, world to break into, regardless of kind of your pedigree and all that fun stuff. Like, how did you kind of move into the private equity and the investing side?
Yeah, it's a great question. So when I got back to do my MBA, I got involved in venture capital for about a year and a half. Within VC, it was kind of my going back to working with those early stage businesses as an investor, spending a lot of time with life sciences and tech-based businesses, specifically in St. Louis and the broader Midwest. and ultimately determined that it was a little too early stage for me. And got a call basically as I was getting ready to graduate to be part of a private equity firm in the St. Louis market, and took that opportunity, having spent a fair amount of time with those middle market type businesses, like the investment philosophy, like cash flows, and thought I could be impactful on the investment team. What I didn't realize, though, was that I was stepping into a business development role, which I thought would be short-lived, and ultimately being more of deal execution as I progressed throughout my career. Where things really kind of took a turn was after 4 to 5 years of doing the business development side of private equity. I just found that there was a lot of movement towards business development in the industry. It was still relatively a newer, underdeveloped part of the overall business in the ecosystem. However, what you saw though was proliferation of funds, the need for a differentiation in sourcing models. There was extremely large amount of relationships to be developed across the investment bank landscape and broader intermediary landscape, and felt that you could be extremely impactful as an individual in that side of the business. You ultimately too just had a case where there was a ton of white space, as nobody had really found a one shoe size fits all for any private equity firm to do business development. It was really predicated on the strategy of the firm, on the person and the personality of that individual, and really being your own brand, to support the brand of the firm, but going out and ultimately driving those impactful relationships that would ultimately lead to transactions.
And I attended a few private equity M&A like deal conferences over the last 2 years, and it seems like there is a ton of intermingling between investment bankers and private equity, and these conferences are very high intense, getting deals done and all of that. I guess how do you and Great Range Capital, the firm you're at now, how do you think about business development? How do you find businesses to invest in, and then maybe on top of that, what's kind of the criteria or structure that Great Range kind of looks for in their new acquisitions?
Yeah, sure. It's a great question, and it's what really drove me to Great Range, is thinking outside the box in business development. So while we do attend conferences and we spend what we would call the speed dating sessions with intermediaries, largely investment banks, we devote a lot of our time and effort in my team, which I'll speak to more here in a little bit, in pursuing opportunities outside of just the conference landscape or the broader, meeting face to face with intermediaries. And while that's still an important category in how we pursue new deal opportunities, we do focus a lot of our efforts on proprietary sourcing, sourcing through external referrals like service providers. And I'll get into it more, but we ultimately work with a market ambassador program here, which I lead and oversee, of 22 individuals across the broader Midwest that are helping us source deals in underserved and untapped markets. And so what makes Great Range also a little different is our investment philosophy geographically. And so the firm originated with two private equity individuals that started their careers on the coast. So not that different than myself in the Northeast. Ryan Sprott and Paul Maxwell started the firm and ultimately built an investment thesis that said, hey, we're from Kansas City. We associate ourselves with Midwestern values. We want to make institutional grade investing an opportunity for family founder owned businesses across the broader Midwest landscape. And we just felt that there is not the same amount of capital based attention drawn to this part of the country as there are the coasts in some of the broader cities. And so firm originated here in Kansas City with a real focus on investing in Midwestern businesses and people. And so with what we do here is we're operating on a value set, a Midwestern route, as you call it, and I'm sure others have heard along the way, where our approach really is about taking the experience that we've had at larger shops and bringing that level of investing in a Midwestern-based approach for family founder-owned businesses across the broader Midwest. And so when you think about markets like Topeka, Kansas, Wichita, Oklahoma City, Tulsa, these are all markets with really great opportunities to form a partnership with a potential seller. And we felt that there was relatively a lack of attention paid to some of these markets. And a lot of it is due to just time and resource allocation and firm management about where you can go source opportunities. And we're doing it in the lower middle market, right? So our size criteria overlaps extremely well with these types of businesses that exist in relatively any industry across the broader Midwest. Now, there's largely manufacturing, but there's a ton of B2B services businesses, and there's a lot of opportunistic investing that goes on as well. And so when you look at our size criteria, it's simply 3 to 10, 3 to 12 million of EBITDA, typically 10 million of revenue. We are majority control investors, and we're looking to partner a traditional private equity fund here, but resonate extremely well from a cultural fit with a potential seller that's either a multi-generational family founder owner. It could be an entrepreneur that's looking for a liquidity, second bite of the apple, or any and all of the above. And that's who we're really catering to. And so while those conferences are extremely important, we are not buying from other sponsors. And typically, the extremely competitive process is harder for us to differentiate from that cultural fit standpoint.
Got it. So there was a lot there to unpack, and I wanted to go back to something before we dig into the criteria. You mentioned an ambassador program. What does that mean?
Yeah, it's one of the, having done this for 9 years on the business development side across multiple firms, the market ambassador program is truly unique. I've never really seen it done this way, and it's one of the things that drew me to the firm over the last year. So we have 22 market ambassadors across the broader Midwest, and they sit in some of those cities that I just mentioned, right? So Tulsa, Oklahoma City, St. Louis, Des Moines, Iowa, Omaha, Lincoln, etc. And these individuals have all either had successful careers, recently retired, or they're still employed and are still operating in those markets. But most specifically, and most importantly, they all typically have grown up or spent the majority of their careers in those markets. And so when we think about that aspect of relationships driving transactions, it's having that warm intro or that warm connection in that market versus making that cold call to a business owner or an email outreach or any sort of campaign outreach that's typically done. And so when we can utilize our market ambassadors to not only source opportunities locally in that market, they're also working with us throughout the portfolio and portfolio needs. They can help us identify new channels for entry within our portfolio companies, potential sales leads, whatever it might be in that market. They're working with us in those capacities to do so. So specifically on the sourcing side, it's not, hey, just go have coffees and source up opportunities, with the local guys that you play golf with or gals that you see, throughout the market. It's not only can you do that, but hey, here are 10 companies that really fit the GRC criteria that we find interesting or that fits potentially our investment thesis. Can you help us get in front of those business owners and get connected? And more oftentimes than not, the answer is yes in that regard. And so it really provides that immediate entry and pathway to having, a really warm initial connection with the potential seller.
Got it. So it's almost like you have these, I guess other people maybe call them like operating advisors or something, where they're kind of like niche in a specific area. Yours are sounds like they're a little bit more aligned to a region, because these are maybe smaller markets than, obviously a New York or San Francisco or anything like that. And so having that local knowledge and almost like a warm lead, because you probably know somebody that knows somebody in that market to get you in front of the right people. Is that kind of the thought process? It's like you have this local, talent in there, and they are able to get in front of people that you or me as somebody that's outside of that market really probably never will be able to get in front of them without spending a lot of money and time.
Yeah, 100% correct. It's interesting because typically you're not going to find a bunch of private equity firms flying into Lincoln or flying into Des Moines unless they're transacting on an opportunity, right? And that opportunity has either largely come from, an investment bank mandate, or it's an add-on opportunity within the portfolio. We have seen, and I've seen over the years, others have deployed more of a regional resource, and a lot of groups have expanded their business development teams to include regional coverage, but still to get to those localized levels in these markets, and these markets are very special, right? And so a lot of the Midwestern markets, super nice people, super welcoming, but they want to see you in that market.
Yep.
It's kind of an initial very warm meet and greet, but it's a trusted relationship. And so the more they see you and the more that they know that you're invested in that market and believe in that market, the better off you are. And so while it can be done at times regionally, the impact and the success rate is typically less if you can only get into that market a couple times a year versus have somebody with boots on the ground that lives there 24/7.
Got it. And I'm guessing, but I'll ask. I guess I'm guessing these aren't like full-time employees with GRC. They're almost like strategic advisors or contractors that you bring in, or they bring you deals, and then that's kind of how they get quote unquote compensated to kind of keep doing what they're doing and be motivated on a daily, weekly basis.
Yeah, that's right. Think of them as advisors and an extension of our business development team while not being full-time employees at the firm.
Got it. And then from like a management of those folks, how do you, because I'm assuming they all kind of, are not, reporting, and using air quotes, reporting into you and your team. How do you kind of monitor progress? How do you, track successes? Like, I'm just kind of curious, and also motivate them to, continue to, find things in businesses that are, that meet your criteria.
Yeah, it's a great question. So one of the things since I came on board last year that we've recently launched is a platform under Notion that is a go platform for the market ambassadors. And what that simply means is that it is a single page resource with everything that they need to know in terms of what we're looking at from opportunities, what's specific potentially to their market, what's going on in the portfolio, communication lines that are always open to connect with me real time. It's got, key firm updates, personnel updates, basically everything that, you're not losing touch with these individuals and key members of the team on a go forward basis. And so it's not say, hey, let's just check in every quarter and see how things are going. It's real time 24/7 feedback for them to basically go to a site that is basically populated by myself and our team that shows everything that's going on. Now, while we have that, there's also the open lines of communications I mentioned. So we do check in more often than quarterly. Typically, we're doing it once a month with target lists that they're pursuing. They have watch lists. They have listings that are potentially in our active pipeline that we're communicating with them timely on. So there's a whole host of methods that we're using. And then from a team and a culture standpoint, it's my role as well as other members of the team to get into these markets alongside of our market ambassadors. So we don't want to be ghosts at GRC and never be in these markets. We want to be impactful and helpful for the market ambassadors, not only for face-to-face meetings, but to be further invested in the markets. And so we will spend multiple trips a year to each of these markets, specifically myself, to make sure that we have efficient coverage from the actual firm in the market.
And I'm sure that helps, as you get introduced to opportunities, because while it's perfect to have a local ambassador there, if that local ambassador then brings in, somebody that they don't know, that's not from there, right? It's still that, trust but verify. I grew up in a very small town in Northeast or in central Pennsylvania, and it's very similar to, your Midwestern values of, we like to do business with our local people before we go outside of our immediate circle, if that makes sense.
Yeah, that's totally correct. I'm a big golfer, so I always use golf analogies, but think about them putting the ball on the tee, right? And then it's my job to hit it. And so when you have that warm intro and that connection, that meeting set up, while they have that trusted advisor and that relationship in the market, they still need to learn who we are, how we're differentiated, what we're offering as a potential partner down the line. And that's really where we step in and have that conversation alongside of our market ambassador. They've already built that personal relationship, but it is just as much, if not more important for us to do that going forward, as we're the ultimate partner with that potential seller.
Got it. No, that's very fascinating. I hadn't heard of a market ambassador program built out to that extent. And obviously it seems to be successful and working. What's the typical kind of framework for Great Range Capital as from a, like, how are you trying to do like X number of deals a year, or like how does that kind of typically flow from your kind of business development to closing deals?
Yeah, great question. So we're a $250 million fund. It's our third fund. We're typically looking to acquire 3 to 4 platforms a year, call it 5 to 8 add-ons. It's a buy and build strategy at the size businesses that we're pursuing. We are generalists, so we will look at everything from niche manufacturing, B2B services, resi services, you name it. We're looking at everything really, transportation and logistics. We cover a whole host of sectors. And if you go to the website and look at our current active portfolio as well as realized portfolio, you will see that variety of different types of businesses that we've invested alongside over the years.
Yeah, no, I took a peek at that and I downloaded your kind of PDF kind of investment criteria thing. And one thing I wanted to touch on that you mentioned earlier was this family slash founder owned businesses. And I'm kind of curious to dig into that a little bit from, baby boomers that built businesses, 30, 40, 50 years ago. And, they built a successful business, but what happens when you get introduced to a family or an entrepreneur that started a business that doesn't have a true successor, or maybe they haven't hit the EBITDA threshold that you're looking for? Like, what do you do with businesses that kind of are below, that are attractive, but maybe they're below in a key area, which makes them kind of outside of your buy box?
Yeah, great question. We see a lot of it too. First and foremost, before we even get to that point, it's simply being a great listener, right? Listening to the business owner and understanding what they're looking for and what their needs are. And not a single one has the exact same needs as another, right? There might be a family dynamic going on there. There might be a health issue. There could just be a liquidity realization that's sought after. There's a whole host of different things that are going through that business owner's mind. And it could be inside the business, it could be outside the business, it could be part of the overall industry that they're playing in. There's a whole bunch of different things that come about in that initial conversation or two, and you react to that accordingly, and really figure out what they are looking for in the next phase of their business, whether they're involved with it or not, and how we could best potentially be a fit for that. Now, there's always the cases that come along where, easiest one to always say is hey, size wise, you're too small, right? Or hey, you're in a really specialized industry that, call it energy, that we're just not going to be as aligned to, or there's other dynamics going on there that are just less of a fit for us. A lot of times what we offer is, one, we try to educate on what private equity can be and whether or not we're the right partner for you. Our network over the years, for other sponsor owners potentially to partner with, is pretty broad, and we're always looking to find a great fit for that business owner. And so if it's not necessarily with us, one of the avenues that we always can do is make an intro and find that right fit for that person and do right by that person. We're not looking to, necessarily hog everything in that regard. And we won't, very well tell you, we won't be the right fit for every business owner that we come across. There are other times where, maybe they just need to prove themselves out more. Hey, we got a big sale contract coming up next year that gets us into your size range if we're a little low in size. Well, let's stay in touch. Let's utilize both the market ambassador program and our initial network, or I shouldn't say network, but our initial relationship that we've established, to continue forward. And let's see what happens. And if you get there on that front, let's have that conversation. And if not, that's okay too. We can continue to offer other avenues for you, if that's still what you're looking to do.
No, it makes sense. And I guess from a broader, market or deal flow perspective, like what, we're recording this in early February 25. I talked to a number of private equity and kind of VC firms coming out of, near the end of 24, and everybody was very optimistic about 2025 and what was going to happen, and deals were going to, not get back to maybe 2021 levels, which may be, outpaced. But what are you seeing so far in the first month and a few days, and what is your and GRC's kind of outlook for 25 as it relates to deal flow, whether it's deals that you're going to be buying or maybe offloading because you've held some maybe longer than anticipated?
Yeah, it's a question I ask others every single day when I'm on the phone or when I'm doing these meetings face to face or over Zoom, or Teams. I would tell you that 24 was a relatively slow year across the industry. The further up market you went, I feel like the slower it got. And largely it was sponsors not putting deals into market for a whole host of reasons. But the family founder owned business was also slow to transact. There was a lot of uncertainty in the political scene and the macroeconomic environment. Interest rates were up for majority of the year. There were a lot of things that made a transaction a little bit less favorable, a little bit more risk to the unknown going forward. And a lot of folks put the pause button on that. In 25, from the communications that I've had and from what we're seeing here, we're expecting it to be a positive year. Those that were sitting on the sidelines over the past few years with pent up capital are anxiously waiting to put that money into the market and deploy and get to work. Those that have had businesses held for potentially a longer cycle than they would like to, for whatever reason that might be, are looking for ways to actively put that business into market going forward in 25. I think the first quarter starts out still a little bit slower as people get through audits and they get companies positioned well. But for the second half of the year, I'm expecting to see a lot more activity across the broader lower and middle market.
Yeah, no, I feel like that's pretty consistent with what I've heard is, I think some people thought, Q1 was going to be, hot out of the gates. I think it's been a little bit more tempered than some people maybe have thought, but the sentiment is kind of like Q2, Q3 should be kind of, pick up the pace as far as deal flow goes.
Yeah, and it's interesting, right? And a lot of types of businesses that we're pursuing are, not necessarily following the lines of the market always, right? So again, you go back to what I was saying around family ownership dynamics. If there's a health issue or if there's just an aging business owner that's just getting fatigued with the business and tired and ready to do their next thing, go travel the world, whatever it might
Right.
be. Those types of events can be one off and not necessarily follow the broader market that we were talking about. But overall, I do think that we will be seeing a much more active landscape in 25. And typically, a lot of those other business owners in the family founder world in that space, they do tend to follow what goes on a little bit up market. If you own an HVAC services business and you see more activity in the space, you're more likely to say, hey, maybe I should put my business up for sale.
Right. Yeah, you kind of follow the big boys because if they're selling, then maybe there's an opportunity to get more value than if you just sold, in a slower market. As far
Right,
as if
right.
you have the ability to kind of maximize value by waiting, other than some of the things you talked about that are more kind of one-off life events that require you to transact, regardless of time of year and all of that. So, when you're kind of moving and taking these majority control interest in these deals, a lot of times, especially, when you deal with, older businesses and older owners and founders and things like that, some of them want to get out of their business because, they're old and they want to retire, like you said, and travel the world. Others are like, I'm fed up with actually running the business. I'd rather just be a salesperson, or I'd rather just go back to being, the wrench turner that I was earlier in my career. What are some of the talent positions, like the positions that you come into and say, okay, we definitely know we need to replace this role, or we need to always bring in, a CFO, or are there kind of common themes of kind of people that you need to bring into your deals kind of post close?
Yeah, good question as well. And we do see a broad spectrum of intent once there is a sale from that former owner, right? Some want to stay on for a transition period, which we certainly encourage, whether it be a role of equity or just a position within inside the business for a go forward set period of time. Highly encourage. Typically, at the size range where we're investing at, there are some common themes and key areas that we identify. One of the things that helps us do that and what gets us to be such a broad investor from an opportunistic standpoint is a really broad network of industry advisors that we bring to the table. And so, in everything that we're looking at, we will have conversations with industry experts in our network that ultimately might become part of that business, whether it be on the board, a potential backable exec, what have you. But they are helping not only coach that potential business owner that's staying with the business going forward, but ultimately advising us to what they're seeing across the broader industry and needs within that business. One of the things, though, from a sizing standpoint that we always typically see is just infrastructure need across the business, largely on the management team level.
Mm.
Whether it be systems, FP&A, all the things that you see typically on the lower middle market businesses that haven't really been professionalized. Some say low hanging fruit, but others say, heightened risk is things that we are working with on all our businesses, right? And so typically you're always going to look for expansion of management team, and it's something that largely a business owner has sought after, and maybe they just haven't done so from a risk standpoint, or it's been treated a little bit as a lifestyle business that they're looking to propel to the next level of growth. All those things come into play, but those are definitely some of the key themes that we see across the board.
Got it. And then I guess from a sector perspective, I know you're pretty generalist and pretty broad amongst kind of your B2B services and manufacturing. I guess what are the areas that you see, I guess, maybe themes that are kind of hotter areas than others? Maybe over the last, you've only been there for about a year. So, over the last call it year, what have you kind of seen as far as like, hey, these businesses seem to be, transacting more or being kind of readily open to being, to being purchased?
Yeah, a lot. We saw a lot of softness amongst manufacturing businesses in the past year, and that was kind of just more broad. In our size range, there's a lot of activity right now in the broader B2B, B2C services. And a lot of it has to do with the fact that it's a really good opportunity for a buy and build approach. So you can look at these opportunities as a platform, scaling through not only organic growth initiatives, but through acquisitions as well. And with that, there's been a lot of activity up market that has come down market, from add-on acquisitions, as well as the potential to get into a platform at a little bit of a lower size for an upmarket fund that has driven much more of an attraction to the size range in those specific sectors.
Got it. No, I think that makes sense. I feel like I've talked to a number of firms that specifically are looking for, the B2B services, HVAC, roofing, plumbing, all those things. And there's a ton of people out there trying to do roll ups and scale those businesses in this lower middle market. So it's very crowded, I guess, from a buyer perspective, for sure.
Yeah, it's funny. A lot of times, and this kind of gets to the point again on that relationship side. A lot of the businesses too that we see, in a market like a Omaha or a Tulsa or Oklahoma City or whatever, they're getting calls all the time, right, from other firms, and they're thinking about it and contemplating it. But some don't want to be an add-on acquisition; they want to be a platform, and then others just want that local partnership and they want that regional partnership. And so, while I say we're not for everybody, there are a lot of groups out there that were exactly what they're seeking versus the broader competition.
Well, and also, if you built this business, right, over the last, call it 20, 30 years, and you're kind of a baby boomer founder, this has been your baby, right? This business has been your baby forever. And, some people are like, cool, done. Give me the biggest paycheck. Let me get out of here and go, sit in the beach
Sure.
in Florida somewhere. Others, and I've talked to a few of these folks, like they get to the 11th hour of buying or, selling their deal and they back out because they're like, I just can't sell this baby. I want to keep going or whatever. And so, I would imagine that having the kind of Midwest values, like those types of things, and having those local, ambassadors in market give you a leg up sometimes when you're competing against, a New York private equity firm that just wants to suck your business into another platform and roll it and go from there. Because a lot of these people are people that are your family, your friends, you've worked with them for decades. And so I would imagine that you may have an appeal to them that, some of these other, more financially focused firms, may not, rub them the right way. As far as
Yeah, not to detract from what some of my buddies on the coast are doing at their shops, because I certainly applaud their efforts and how they grow and build and scale some of these businesses and have done it with great success. One of the things we do look at though is a lot of the things about what's going on in the town, right? What's the brand? What's the employee base? What's the culture of that organization? What's important to that business owner? A lot of those things that are somewhat intangible and specific to that business are extremely important to us and go into every overall assessment that we make from a culture fit standpoint, right? And so a lot of those, desires from that potential seller culturally have to overlay and fit with us. And so, it's one of the hardest things that we have to do, and we do it fast throughout the process is making sure that there's that cultural fit between Great Range and that potential seller.
Yeah, no, it makes sense. I mean, this has been, an awesome conversation, Matt, and I really appreciate your time. Before we get out of here, I wanted to kind of just, maybe share some advice for people listening to this that, maybe they're sitting at PwC or EY or any of the other, big four, big six kind of firms that have an idea that maybe they want to get into the private equity or venture capital world. Like, what kind of advice would you kind of give them to kind of, make that transition? Because it's not as easy as people may think.
No, and I'm kind of one of the rare exceptions, I guess, that didn't go through the traditional pathways to get into the industry. I'm going to give you an answer a little bit from a business development side, but it applies to anybody at the organization. It's never too early to start networking and build your career, and relationships drive transactions. And essentially, that network that you build, whether it's in your comfort zone or whether it's outside your comfort zone, that network will be with you for the rest of your career. And so one of the great things that I've had the opportunity to do is build a really great network over the 9 years of doing this that I feel like will carry forward for the rest of my career in this industry. And I can't emphasize that enough. And then when you go to speak, direct to a business owner, or whether it's a business owner, whether it's an investment banker, whatever, you're building a relationship with that individual, right? And one of the things you learn over time is people may not always be at the same organization throughout their entire career, but when you know that person at a personal level, when you know their kids, and when you know how they grew up, what their interests are, all that stuff, that matters. And to take the time and effort to do that is worth every penny in the long run.
Yep, the old adage, it's not necessarily who you or what you know, it's who you know sometimes. And if you can build those relationships and people know you, then it makes getting a warm introduction, whether it's a business owner or a hiring manager, that much easier, for sure.
Yeah, and so, if you're talking about somebody like myself and advice for somebody coming out of the big four, whatever it is, to get into this industry, the technical skill sets are imperative and you need to have those. But it is really that broad overall personal skill set, being able to communicate effectively with people and being a great listener, just understanding what people are looking for and how can you drive value in that organization. And you don't need to come from that industry to drive value necessarily in that organization.
Yep. Well said. Well said. Well, Matt, like I said, this has been awesome. I want to kind of wrap this things up with a 3-pack of questions I ask every guest to get to know you a little bit more. I guess first question here is, what's an influential business or just general book that you've read lately that you would suggest?
Yeah, good question. I've both read this and done the audio version of this. I'm sure there's a bunch of folks in the audience that have probably heard of it or read it, but big fan of Never Split the Difference, Chris Voss. It talks a lot about, it focuses on negotiation tactics, but it's largely around being an active listener. What are the right questions? How do you influence outcomes? And when I think about what we do, specifically in my role at a private equity firm, I can't harp more again on being a great active listener. A lot of people always try to talk over each other, and that's not the best way to go about it necessarily. It's really trying to get to that heart and the root of, hey, what is that business owner looking for? Or what are they looking for in this process? Or how can we differentiate ourselves? And a lot of times that comes through active listening.
Yep. No, I love that book. I've listened to it and read it. Definitely recommend that for sure. All right. Question 2 here. What is your favorite thing to do outside of work?
Like I said, I'm a big golfer, and so I've had the opportunity over the years to play a lot of great golf courses. And what I love about it, probably more than anything else, is the relationships that I built on the golf course. It's not only fun to play for me, but I can think back of multiple experiences over the last handful of years that, will live with me forever. And we can always revert back and, the folks I played with and have those great memories. So I just think it's it's really great that it's become such an important activity in our industry, I would say. There's a lot of tournaments, there's a lot of get-togethers around it, off-sites, what have you, but really encourage, and even if you're not a good golfer, and even if you don't ever play, you can still go out and hang out with folks.
Yeah, no, I played in a golf tournament out in Scottsdale 2 weeks ago, right before an event or a conference, and I played with a golfer that this was his second time golfing, and it is what it is. It was a scramble, so it didn't really matter, and we all had a good time. So
it's perfect. Yeah, works great.
All right, last question here, Matt. What's your favorite vacation spot?
Yeah, we do a recurring vacation every year with a family to Anna Maria Island, and it comes up in March actually every year around spring break. And I know they got hit hard last year. I've got a lot of friends in the Tampa region that are still digging out from the hurricane. I've heard Anna Maria's come back. It's such a nice localized family destination. I encourage anybody to go check it out if they haven't. It's about an hour outside of Tampa.
Okay.
A very different little island in Florida that's very community centric. You can walk anywhere on it. You can take a golf cart anywhere. Just a great setup.
What north south of Tampa? Which direction?
It is south of Tampa.
Okay.
Yep, just along the water, south, almost due south of St. Pete on the other side.
Oh, got it. Okay, fair enough. Yeah, I was in Tampa a number of years ago, but hadn't heard of Anna Maria Island, but I have to check it out. So
yeah, I encourage you to check it out.
Awesome. Well, Matt, this has been awesome. If people want to kind of reach out, learn more about you and Great Range Capital, like what's the best way to connect with you?
Sure. I'm available at matt.stranz@greatrangecapital.com. You can go to our website, and you can certainly find our one-pager and connect with me through that as well.
Awesome. Yeah, we'll put the email in the show notes so people can reach out. Matt, thank you very much for the time. This has been great to get to know you a little bit more and get to know a lot about Great Range Capital.
Thanks, Justin. Really appreciate the time.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.